What's going on, guys? Today is Wednesday, September 1st, 2021. We're going to focus on just Netflix and Apple for today, as there's a lot of key lessons between these two. There was an excellent long trade as long as a short trade, and in this current market conditions, we're at all-time highs. Sometimes it's a little bit difficult to be able to spot the short trade. There's something called all-day fades or shorting the backside weakness. So there's a few things to look for when you're choosing to short some very hot stocks. So let's start by just understanding the context between the two. On the left-hand side is the S&P 500 up here. The red zones that you're seeing on the chart is something that we get from an algorithm because some of us use quant trading app. It's an algorithm that generates these sell zones that I get every week, and it provides intraday levels to take trades off of. So I did not draw these levels on my chart. I'm already aware before the market gets to certain price points at where I should be looking to take certain trades off, where I should be looking to take profits, or where I should be looking to enter trades. If you're interested in joining quant trading app, the link is in the description down below. But moving right along, here's something to take note of. The NASDAQ is already at its weekly sell zone. In context, over here we can see the S&P 500 is nowhere near its weekly sell zone. So that's already showing that there's more strength in the NASDAQ than there is in the SPY. However, whenever these two do not sync up, it's very hard for one of the other indexes to push higher. So in other words, you won't find the NASDAQ going much higher if the S&P 500, the SPX, is lagging behind. You usually want to see both of them around the same area. The fact that the SPY was not even in this range is showing signs that you should be looking for some sort of a short trade later in the day. What we have down here is Apple. Now, the quant trading app members know whenever a ticker breaks past its weekly sell zone on a Monday, it's something that's showing a lot of relative strength. It's not very common. We already know the first retest of the weekly sell zone usually turns into strong support, especially if it consolidates in the level. We know to come in and expect a 2 sigma touch later in the week. So the stick level up here is 2 sigma. This video is not about an explanation for each of these levels. Again, if you're interested, just let me know in the comments down below or join the Discord, and I'll be happy to answer any questions. On the left-hand side, we have Netflix, and we can see it hit its weekly sell zone today, so it was a little bit different from Apple. Apple was a very strong long play into the 2 sigma level because of that. However, the move came very quickly at the open, so if you missed that move and you wanted to catch a short, how do you catch this short late in the day? We'll get into that pretty soon. On the left-hand side, we have a long trade that was very easy to spot on Netflix. However, I did not take this long trade. I was not interested coming into the day on any of these long trades past the opening session. If we zoom in a little closer, I have a vertical line on all the charts showing the same time frame. This is right when the NASDAQ broke down below VWAP. This gray line that you see right here on my chart is VWAP. So whenever one ETF breaks down below VWAP and another one is also breaking down below VWAP, you want to look for tickers that you would want to short. In this particular case, Netflix and Apple were the only two tickers on our watch list that was over 2 sigma today. And the fact that they were over 2 sigma means that they have less than a 5% chance of staying above this level by Friday. It's only Wednesday, so yes, it did not mean they needed to sell off today. However, the fact that the NASDAQ was already in its sell zone and the SPY was nowhere near as strong as being up in its sell zone as we just mentioned, and now that the tickers had both crossed below VWAP, we want to look to see if there's any short trades or short setups in these tickers. So Apple at that time had already did most of its moves, so this is not necessarily an A+ setup. I would consider this level right here is what's known as the 2-day anchored VWAP, and on the left hand side, as we can see, Netflix was still above its 2 sigma level, so that presented a really good short setup later in the day. However, I want to start with Apple, so let's just take a look at this a little bit larger. Breaking this down real quick, again, we can see now this is a 5-minute time frame. Apple breaks at the open, pushes very aggressively, very strong candle, and we can already see the sellers start showing up at 2 sigma as they usually do. We had the first real retracement back to VWAP. We had VWAP confluence with the intraday algorithmic zone, so we already know to take this as a long trade if you're scalping. Now, personally, I'm not looking at these smaller time frames that often. I'm looking for the bigger trade. I'm looking for an intraday swing, or I'm looking for a swing trade entry, but there's a lot of good setups for things like this that happen repeatedly almost every single day. But this is a trade in which I would leave alone, just because, again, at this time the NASDAQ was already struggling in its sell zone, so I'm more so looking to see where is the optimal short entry. But this is a viable long setup right here. It's an A+ trade or an A trade depending on your time frame, and your target is back to higher day. But I would not take this trade again because it's too small of a move. I generally pass on these types of plays. So what we have here is a new push into the all-time high, and we come back down and we retest 2 sigma. Now what we have is a 2 sigma confluence with VWAP, and if we know VWAP is our best friend, so here we have VWAP, here we have VWAP, and we get another push, but this time the push is not as high as the first one. So we're already creating what's called backside weakness, and we're forming some sort of a downtrend that we see right here. Whenever you see something like this, it means that the momentum would be slowing, and it already makes sense with all of the wicks that are happening right here. We already know we're over 2 sigma, so we have statistics on our side, we have a quantifiable level, and that in itself is already some sort of an edge when it comes to trading. So the next question is logically, when do you enter the trade? Taking it or fishing for the top is sometimes very difficult because it's hard to hold that short with conviction, because you always have this thought in the back of your head, what if you're wrong and you get stopped out, or what happens if you don't have a hard stop in, or what happens if the market maker just does a stop loss hunt, you get triggered and then it actually ends up selling off. So psychologically sometimes it's hard to actually enter in short trades above certain levels like this, and this is what this video is mostly about. It's understanding how to trade around key levels. And again, if you're not using an algorithm that gives you certain levels like this, let's just say you had your own resistance level up here. It doesn't have to be a level from quant trading app or another algorithm or some sort of indicator that you use or anything like that. Just imagine that you had your own resistance level here, and a stock breaks past the resistance early in the day, retraces, pushes past the resistance, then it comes back down, retraces, it pushes, and it doesn't get as high as the previous top. As the stock starts rolling over, look for another indication, especially if you're day trading, and VWAP is probably the only and the best indicator, guys, that you should have on your chart. And this right here being VWAP, if it aligns with any one of your support or resistance levels or your indicators or anything else in which you use, the breakdown below VWAP is usually what you want to take as an entry, because in this case, the fact that Apple got back down below 2 sigma, this now becomes the resistance that it's supposed to be, and the fact that VWAP was here also should add confluence to the trade, and this should give you a little bit more conviction, because it means if you enter in at a short here, your stop loss is very clear and identifiable. It would be right over the previous wick of the previous couple 5-minute candles, or you could keep it even really tight right over the level. I would encourage that you guys give it a little bit more room and use a level like this, but in this particular case you can use right above the level, because in a sense this trade should go right away now that it's broken down below VWAP, and you don't want to stick around if it comes back up, because it means there's a lot of other shorts that were probably thinking the same thing, and the fact that we've turned back around, they're probably going to get aggressive in covering, because no one wants to stop out at the high of day. So you're going to get some people actually stopping out, and that's going to actually cause price to go back a little bit higher. So stopping out, being one of the first to stop outs in certain cases is never a bad idea, but you will end up getting stopped out frequently, as opposed to giving your trades a little bit of wiggle room by using something like this as a stop loss. Either way, the identification here is the fact that momentum slowed down on this bounce. It did not get back up to high a day, so we already were forming a downtrend, and this is showing weakness. Now we have, on a smaller time frame, I'm pretty sure it would be easier to see that a small bear flag is forming, so we have a little bit of a technical pattern, which is something we want to see, because as day traders we're looking for visual patterns, visual indications, and things like that. So in this particular case we have one. You want a clear identifiable level to risk off of, and then you always want to pay attention to where VWAP is. So this right here is a beautiful amount of confluence of things that creates a plus trade in my playbook. And right here we have the algo tells us, certain levels that we should be paying attention to for profit targets. So if you're taking this as a short on the breakdown below this level here, this can be a first place to take profit depending on your size. If you're in huge, obviously you're going to want to peel some off. So this is if you're a really aggressive scalper. This is only 15 minutes here, because these are 3 5-minute candles, so that's a pretty short trade. But the reversion to the mean in this case, the fact that we were above 2 sigma, you can expect there to be a deeper retracement, especially since this was the first day that we touched 2 sigma and Apple never pulled back. We had the first pullback down here that came from Monday. Tuesday was the pullback, and then we pushed higher, so we can expect some sort of reversion to the mean. And in this particular case, this is the 2-day anchored VWAP, so this would be the target for a short setup like this. Whenever we see price pushing past 2 sigma and then we break back down below 2 sigma, At the same time, we break down below VWAP. At the same time, something like the NASDAQ is in its weekly sell zone, or the SPY is in its sell zone. You can comfortably hold this short trade and, trail your stop if you have to. Take some profits along the way to make yourself feel comfortable. It's all about the amount of size you have on, especially if you're trading weekly options or if you're trading monthly options. Obviously, the risk is always different per trader depending on your account size. But that's a quick anatomy, I guess you can say, of breaking down the price action, the things to look for when you're looking to enter a trade, seeing if you can spot setups. In this particular case, we also had this formation that was forming here. So if we have this ascending wedge, a breakdown of the ascending wedge also triggers shorts. So there's multiple technical patterns, but the key important thing is, where are the technical patterns forming? This is all forming over 2 sigma. We have this, then we have this, and then we have it all forming at 2 sigma. Bear flag, ascending wedge, stock needs to pull back, break down below VWAP. It should be all pointing signs to entering a short trade here. Let's take a look at some options real quick. This is the $152 strike. So in this particular case, right where Apple closed. The reason this strike price was selected, because this is the one with the highest open interest of the day. There was the 150 strike price, but that one was the next strike in the options chain, and it was too far away. And we'll take a look at that, why it didn't make sense to trade that very quickly. But here goes the entry in this particular case right here. The entry, as we broke down below 2 sigma, this is the entry. The options are going for about 34 cents. And if you're taking profit the moment we get to the zone right here, you're talking about a trade of about 23% in 15 minutes. These are 1 minute time frame. This is a 1 minute time frame on the options chart, and this is a 5 minute time frame on the left hand side. So 23% in 15 minutes is not bad. Again, that's if you're a more aggressive scalper. You probably have a lot of size. For most of us, I don't usually put that much size on my day trades, so I look for the larger moves. And a trade like this, with a setup like this, you can comfortably hold expecting the larger move. And as mentioned, the larger move profit target would have been the 2-day anchored VWAP, if not low of day. I would not target low of day all the time. I would more so look for the next important structure in the way between the final profit target, which in an ideal world, the final profit target would be low of day. Anybody shorting a stock is always going to assume we're going back to low of day as a final. That's kind of like the goal as a short. And if you break low of day, that's triggering momentum shorts to come in. But if you're in from around higher day, or you're in from a double top, or you're in from a VWAP breakdown, you're more so targeting low of day as your profit target. But using the 2-day anchored VWAP as your target would put you right here. So about 118% return on an intraday swing. And this profit target would have been hitting at 2:30 p.m. So an entry of the trade at around 12 p.m. and exiting at 2:30. So about a 2.5 hour long trade. Not bad for a Wednesday, especially when we have that much confluence. If we jump right to the next slide, we're going to look at the 150 strike. So moving right along to another strike, this is the 150, as I mentioned, and why it wouldn't have made sense to trade the 150 weekly at this point when Apple was consolidating at the highs. This contract was consolidating at a pretty much 10 cents, which is ridiculous. And at the point when we broke down below, this contract was going for 13 cents. So it would have cost you $13 to pretty much buy one of these. And when it hit the first target, it would have been going for 16 cents. So $3 is not really much profit. So 3 cents on the option is $3 profit. And by the time we got to the first profit target, which would have been here, you're talking about a 75% return. But again, you would have had to have so much size that the commission wouldn't have made any sense to enter in this contract, because even if you held all the way till the final PT, which would have been like a low of day or something like that, you would have had to take this 115% return, but you would have made pretty much pennies when you think about how much commission you would have to spend in comparison to going with the strike that was just one strike closer to being at the money. In this particular case, it was this strike right here, and that's why this was the one that was chosen. Next, we'll talk about Netflix. Very, very, very key things to take away here in this price action. Again, this just looks messy. So just because something breaks of its level, is chopping around, is VWAP, so if it looks confusing, chances are you shouldn't trade it. And to be honest, looking at this just looks messy, which is why there's no reason to feel compelled just because the stock is running to take a trade. There's no real setup here. We did break the zone, but then we came back, we retraced the VWAP, we came down below it, this random volume came in, it pushed, came back to VWAP. Yes, it did retrace the level, push. This will just drive you crazy, which is why I tend to stay away from a lot of these. When we looked at Apple, you guys can see the chart was a lot cleaner from the previous day. We just jump back so you guys can really understand that here. Again, look at how clean this price action was. On Monday, we went all the way up here. And then we came back, consolidated at the level. Here's your loading zone, get a ton of calls. Even later in the day during power hour, Apple did dip and came right back to the zone. So all here was the same opportunity to get the same contract. I believe they were going for 30 cents, 25, 30 cents, the $155 call. So from 30 cents all the way up to $1 and change. Don't remember how high they went today, but look at how clean that price action is. And then you get this nice clean flag that comes here. You know, it's just so much cleaner in comparison to Netflix. This is just a mess. We're all about looking for setups. So what is a setup in this case? We'll talk about the long setup actually towards the end of the video. I don't want to get too distracted from the fact that we should be looking for shorts. So in this particular case here, it is over to Sigma. Same concept as Apple. You want to short it after it's pretty much exhausted itself. Here, the stock has made a huge move for a ticker like Netflix. This is a huge move. It opened the day at 569 or something like that, and then we hit a high of 590. So that is already a huge move. It will tire out eventually. What are the signs that it has tired out? Here we go. We form another pattern, but this time we know we should not be taking breakout trades like this over to Sigma because they're not high probable they're not high probability long trades unless this zone was a little bit higher up here and then it opened here and then it pushed and then it held and consolidated something like this and then it went higher. But the fact that the intraday zone was so close to the sell zone and we had already made such a huge move, you don't want to be buying a pattern like this on a breakout because this doesn't make any sense. So we push to new highs. This is a liquidity trap. There's a lot of retail. There's a lot of people coming in long thinking Netflix is going. I think the all-time high is probably like 5 points higher or so. Everyone's super excited coming in here. And this is a perfect place for bigger institutions to dump a ton of shares. This is what's happening here, a whole bunch of liquidity. This is what's pretty much always going to happen around the 2 Sigma levels. If we were below the 2 Sigma support level, that's an opportunity for a lot of institutions to be buying because they know there's a lot of people panicking and selling. The same thing when we're over this 2 Sigma level here on the resistance side, there's a lot of people experiencing FOMO. There's a lot of people just trying to YOLO in because they're upset that they missed the move. So we want to stay away from this. This right here becomes an entry. Again, this was when the indexes cross below VWAP. So this cross below VWAP on the indexes at the same time Netflix broke down below 2 Sigma. It's the same story as Apple. Now you have a clear level to risk off of. That means if you enter this trade, your stop can be $1 above it, which would put you up here. Your stop can be 50 cents above it if you want. And you're talking about risking from here to here. Your reversion to the mean trade would be VWAP. So risking this much to get this much is definitely within good risk reward parameters. Each trade between Apple and Netflix was, you were risking pretty much $1 to make 3, and Apple you're probably risking about $1 to make 5. And what does this look like on the options chart? This is it right here. So targeting the 580 strike. 580 would put Netflix at right here. This was the strike that had about the highest open interest and volume. This right here would be the entry. So I highlighted that right here, and you're talking about the contract at $2.35. Yes, you could have gotten the contract a little bit cheaper at $2 if you were, perfectly timing everything. But at the same time, as I mentioned before, it's hard to hold these trades with conviction. Every single one of these wicks would drive you crazy because you have this constant fear that you might be wrong and price can push higher. Whereas if you wait for it to break down and come to a clear level, you know exactly what you're buying and where you're buying it. And that's why, yes, you can get it a little bit cheaper trying to get it at the exact top. But first of all, this is extremely hard to do. And on top of that, you're going to second guess yourself this whole time. Whereas getting it right here, your stop loss is probably going to be right here because it should not come back below this above this level, especially if it closes here pretty solid. You want to get out, but you'll know exactly where to get out on the trade. And then by the time you hit your target, which was VWAP right at the close, it was about a 50% return, so about $115 per contract in which you purchase. This candle right here would have probably driven everybody crazy, but that's what options are. This little push right here is just because these are weekly options. There's a little bit of theta and time decay, so when Netflix made this little push, the price did come back. So that's why you would have had to know where to take the stop on the option and just let it play out. If you want to avoid that, you can go with, this is the next week contract that had the highest open interest and volume, and this was the 565, so a little bit lower on the chart, but You can go further out because this time we're talking about next week's contracts, and your fill would have been about $2. It would have been a 25% return, so nowhere near as high as the weekly. But as you can see, this contract wouldn't have pulled back because it wouldn't have had the same theta crush on this little push up here. So that's just the psychological battle between trading a weekly and a 2-week out option. But either way, decent setup for later in the afternoon trade and understanding and piecing the two together. So lastly, to finish this video, let's just take a look at the long setup here on Netflix. This is the 585 call. And why 585? That's right here, because at this point, at the beginning of the day or while Netflix is around this area, if you're thinking Netflix is going to go to 2 sigma, the next strike would have been the 590, and that's a little too far out the money. So this would have been the sweet spot. This also had decent open interest and volume. So if we're looking at this, we want to understand, where do we enter this trade? How do we make sense of this craziness that's happening here? It's pretty much this pattern, guys. If we break out past one of the algo zones and we're holding it, I always tell you guys, this is the level to take your risk off of, either here or here. More importantly, if you see VWAP and confluence with it. In this case, we did not have VWAP and confluence, so that's why missing this trade is not something I would even be upset about, because it kind of came out of nowhere in the middle of the day. Again, this is right coming into lunchtime, so just about 12 p.m. you just get this squeeze with volume. It's not something to be expected, but at the end of the day, the move was consolidating from 10:30 to 12. So there was a whole hour and a half in which this contract was pretty much consolidating in this range. So you're talking about anywhere between, we'll say $1.50 is what you could have gotten filled on this contract if you had the thought process that the video was going, Netflix was going to the 2-day anchor VWAP. I was not even considering this. I did not even care that I missed this. Again, it was all about catching or looking for the short later in the day, because this is not something to be expected. But how can you position yourself to be in a trade like this? If you look at the option and then you understand where it's consolidating above the zone. Again, ideally VWAP should have been here. If VWAP was in this area, I would have definitely pointed this out to you guys in the Discord, but it's just because VWAP is not here. We were on mic a little bit early in the day when some of these things were moving, but this is never a trade in which I'll feel bad about missing. It's more so about understanding the setup and the conditions that the market that we're in. I'm more so looking for intraday short trades now. I'm not so aggressive on my long plays. So I'm going to conclude with that. From a monetary standpoint, just so you guys can see here, the first profit target being the moment we slow down. Let's just say you peeled off some profit here. We're talking about 125% return, so about $230 per contract. And if you were crazy enough to hold for 2 sigma, you actually would have gotten almost a 300% return. So it would have been a monster trade, and you would have had an hour and a half to consider if you wanted to get in, and this is where the contract was going from. So that will be the conclusion to this video. I hope you guys are enjoying more of the frequent uploads as well as the recaps. On YouTube, I was not posting a lot of videos because not everybody on YouTube is obviously a member of Quant Trading app, and I'm not sure if I wanted to share so much of the Quant Trading app, the way we trade and the style in which we trade, to the public on YouTube. But I figured I would start posting some of them and see how you guys enjoy it, so you guys can see what we actually do in Quant Trading app, how we use these levels. Again, these are all generated from an algorithm. Nothing on the chart is drawn in except for these vertical levels, just to show you guys time frames. But I'm not doing much technical analysis, at least intraday or during the week. I'm more so just saving a little bit of time on the weekend just to do a little bit of some technical analysis here and there. But for the most part, about 80-90% of my trading has become quantifiable in terms of taking trades that are based around levels that this algo generates. Quant Trading app shows us the probability of these levels historically. I know how many times Netflix has touched its algorithmic resistance, how many times it's closed within it. I need to know these numbers. I like knowing these numbers. It helps improve the conviction behind the trade ideas that I generate. It allows me to hold longer, and that's exactly what I'm looking to do to elevate my trading. So that's the position in which I'm currently in comparison to some of the videos that I was posting 12 months ago, 15 months ago, 10 months ago. It was a little bit more technical analysis based, which is something that I still do, but I don't rely too much on my technical analysis anymore. I do still look for the intraday patterns, but they need to be around these zones, and I need to understand the context of where things are in relation to other algorithmic levels. So that's the transition in the YouTube. Hopefully you guys are enjoying it. Leave a comment down below, like the video, share it if you learned anything new, and don't be afraid to leave any comments specifically if you want me to go over certain things in the future. And then again, the Discord is free, but there is a premium section. I'm not really in the public section. I'm working on posting a little bit more there. If I see you guys engaging there, I will share a little bit more free content, but for the most part, all the action is happening in the gold membership, because that's where we all have access to these levels. We all sort of see the same thing, so it allows us to all have a conversation and discuss it while the market is open to see if this is a trade we want to take. So hopefully you guys enjoyed this. Stay tuned for the next one.